Is the life insurance suicide clause always enforced? Imagine buying a life insurance policy to protect your loved ones, only to find out that, if something happens to you soon after, the claim might be denied. That's where the suicide clause comes into play. It's a part of many policies designed to prevent people from purchasing insurance with the intent to benefit from it if they plan to end their life shortly after. But does this clause always stop claims from being paid? Not necessarily. Let's look at how it works and when it might be enforced. Most life insurance policies include a suicide clause that applies only during the first 1 to 2 years after the policy starts. If the insured dies by suicide within this period, the insurer can refuse to pay the death benefit. Instead, they usually refund the premiums paid. After this initial period, the policy treats suicide like any other cause of death, and the beneficiaries typically receive the payout. Alongside the suicide clause, there is often a contestability clause. This allows the insurance company to investigate claims within the first 2 years for reasons like fraud, misrepresentation, or suicide. Once that period passes, the policy becomes incontestable, meaning the insurer cannot deny the claim for most reasons, including suicide. It's important to remember that not all policies are the same. Some may explicitly exclude suicide deaths within the exclusion period, while others might not specify anything about suicide at all. This means that in some cases, even if the death occurs early, the insurer might still pay the claim. Always review your policy carefully to understand its specific terms. When a death occurs and suicide is suspected, the insurer investigates thoroughly. They look at medical records, the circumstances of death, and the death certificate. If they cannot prove that the death was intentional, they might not enforce the suicide clause. Legal factors also come into play. Some courts have ruled that if the insured lacked the mental capacity to plan or intend suicide due to mental illness, the suicide clause might not apply. This can lead to benefits being paid even if the death was technically a suicide. State laws can influence enforcement as well. Certain states have laws that specify how long the exclusion period lasts or how the clause is applied. Employer or military life insurance policies might have different rules, so it's good to check those details. For beneficiaries, understanding the suicide clause is important because, if a claim is denied, they might need legal help to contest it. Consulting a life insurance professional or attorney can clarify your options if faced with a denied claim. In general, the suicide clause is enforced mainly during the first 1 to 2 years of the policy. After that, most policies treat suicide like any other cause of death, and the benefits are paid. But always review your policy documents carefully to know the specific rules that apply to your coverage.